What is going on, everybody, and welcome to another weekly update. And what I'd like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, remember to subscribe and check me out at Hemi137 on X to get your daily pulse of the market. Now, before we get started, remember to hit that like button so that the algos can get this message out there, as I do like to help educate just not only on charts but essentially understanding the market dynamic and being prepared, because ultimately you don't want to be going in blind, and the better prepared you are, the better you are in the markets. So with that being said, we didn't have a lot over the past week, but the information we had was there were some very big events that occurred this week, and we have some more bigger events occurring in this upcoming week. But ultimately, again, not a ton, but very important information. So the last week, we did have Powell's testimony. He essentially he was testifying in front of the Senate and the House this week, or Congress, excuse me. And it was a lot of the things that he said were expected. What he essentially said, he didn't expect rate cuts till inflation moves sustainably to 2%. We've talked about this before, about how the 2% target is the target. And no matter what happens, it's always going to be the target. And he's essentially reiterated that part for a long time. But ultimately understand that there's going to need to be a bigger catalyst that's going to have to force the Fed to cut. And as of right now, still too soon, despite even what we're seeing. And there are risks to cutting. So he is aware of the risk to cutting, that if he does cut too soon, inflation is going to come back. The demand is still exceeds supply, which is a huge issue. This is where all inflation is coming from. But 2024 cut is likely appropriate. So he's aware that there will be a cut at some point. He's probably more aiming towards the Q3 aspect of everything, because we still want a couple more months of these high interest rates to hopefully knock out some of these other banks, these other companies. And we're seeing that at a more rapid pace as the weeks go on. It seems like the uptick in layoffs. It seems like the banks, right? We have the Bank Term Funding Program, which is supposed to be over this week. We'll see what happens when that happens. Again, it's not going to be immediate, but in the next following weeks, it could be something that is very big. So we need to keep an eye on that, especially with what's going on. They continue to bail people out. We've seen that, as I have a little bit lower here, the New York Community Bank raises 20% after $1 billion capital raise. Again, they sold off again another 20%, despite the 80% already sell off. So they were close to zero, and then they magically got $1 billion that essentially brought the stock back up, I think, to $3. So that just shows you the stress that they're going under right now and what's currently going on. So again, it's not gone. We aren't in a soft landing. We aren't all these things that they say we're in. We're in a very, very bad state. And we also had the non-farms on Friday, which we got 275K versus 188,000 expected. But again, what I've always pointed out is January numbers were revised lower to 129 jobs. 29,000 jobs. Now, we've been talking about this for over a year. We are essentially in a depression. Things are in a very, very bad state. You wonder why that money's not coming here into Ukraine. More so, that is, I'm sure, to prop up numbers, the GDP numbers that are currently going out there, and all the different hands that money needs to transition to just get the money over to Ukraine. That's an export, right? All these other different things are helping sustain the numbers. So it doesn't look nearly as bad as it actually is, because it is very, very bad. And we're seeing that, and people can tell you that they're not working 2 to 3 jobs just to be broke is ridiculous. And so that is what is currently going on. And it's the truth. You can look anywhere out there. Everybody's feeling the pressure in general. So with that being said, it is a tough atmosphere to be in. And then you also had Biden propose a 10% credit, $10,000 credit for the first time home buyers below median price. Again, there's a lot of, and there's also an incentive to sell your house if you can get it below a median price as well. So there's some interesting things that are currently going on this week. Again, positioning again, and you have the election on top of everything. So a lot of good information. Didn't quite just take the market out. Again, that linchpin is going to be the cuts. But again, what I continue to see this week is a lot of layoffs, sectors, all getting just laid off left and right. It continues, and it's not even earnings. We're still in an earnings cycle, but the earnings cycle resets here in about a month. In a month, we're going to redo all the earnings again for Q1. See how nasty it gets, and then we're going to get even bigger news. So the fact that we're starting to accelerate at this point with layoffs more so than we saw the back half of last year, even though those were all revised down to show lower numbers as well, that we're accelerating again much faster than we did before. And this is what happens when rates start catching up. All these lagging indicators have been telling us everything's great. Well, they're lagging indicators because now the unemployment rate is accelerating at a very, very rapid pace. And coming into the next earnings cycle, it's going to get worse. And so, again, the longer we keep these rates as high as they are, they'll continue to wreak havoc across all industries for a long time. And the fact that Powell will cut rates at some point this year, again, you have to understand it is a very delicate situation because he cuts and that demand is still there. Your inflation is the 9% you got a year and a half ago is nothing compared to what's going to happen. And so, again, living late 70s, again, era in which we had some of the worst inflation in our history, and we're potentially looking at that right now. And so with that being said, again, we are not producing nowhere near what we should be supplying for the demand, and that is really what is causing inflation to happen, because a lot of the younger generations don't want to work, and rightfully so in that aspect as well, right? Like, why work 3 jobs and still be broke? What's the sense in that? And so being said, we still need to produce. And maybe this is why, we're flooding illegal immigrants into the country just to get workers to be able to produce, because we're not producing enough. I don't know. I don't know what the correct answer is there. I'm not trying to make this political, but we need to produce more. And this is why there's been such a big push with AI and trying to pick up production numbers, and they can. I highly believe that they can, but I think we're still like a year or two away from that really reaping the rewards of that. And again, it's all laying infrastructure now before that happens. And so in the meantime, we will see some probably really nasty next 2 years before we really start to see things change dramatically with AI, with humanoids and stuff like that. So again, very interesting to see what happens, but got some good information this week. Upcoming things this week, we got the core CPI is going to be very important. Again, Monday is actually Bank Term Funding Program. It's going to happen. It's not like it's just going to turn on the lights and everything's just going to crash on Monday. But you have to understand, from that point, if they don't implement any other plan, the banks are going to be struggling. And that's another option that they don't have on the table to get money. And so, again, it's going to put more pressure on the banks. And so, again, they're not going to want to lend in a bad atmosphere. Again, even if they could, right, even if rates came down, they're still not going to want to lend in a bad atmosphere. And this is, people talk about, you need to buy now because, when rates go sky high, you're not going to be able to get at the price. But the true thing is that you have to understand, once the rates start coming down, and you buy, right, no bank's going to want to lend just because of the environment is so harsh, and we are in a very harsh, again, I do believe we're in a depression. The way things are, if you just look on the news, if you look on social media, we are in a depression. We aren't in a recession. This is a dark depression that we're in, and it's going to get a little bit worse before it gets better. And so we need to understand that. And over the next couple of years, it will continue to be a struggle. The market will reset, and then the market will start climbing again. But it's going to be a slow turn from that point. So nonetheless, this week we have core CPI on Tuesday. We got core PPI on Thursday. Core CPI obviously has more weight, and then the bank term funding program, you just need to pay attention to the banks starting Monday and seeing what happens. So, and then we have monetary policy on the 20th, and then that should pretty much wrap up our March, and then that's going to take us into the new earnings cycle. Again, there's some earnings that are still going on, but in my opinion, again, I'm waiting for the earnings cycle to start over. So all the industry leaders, you want to be paying attention to those. They might start churning and start pushing back up for the earnings cycle. But again, you're in the middle of March. You need to let March kind of happen. March is still a bad month for stuff to sell off pretty heavy. And we're just started the first week in. This may be the down week. We started to see some heavy selling this past week. So just keep that in mind. SPX is at 60 or 78. So it's jumped about 10 points since last week. That's essentially telling us, because of the current scheduled events that are going on, bank term funding program and core and PPI, that they can have a significant effect in what currently goes on this week. So then Tesla's 1 point higher. Everything else is pretty much the same. But again, if core gets much higher, it's going to hit our Mag 7, which is essentially like Mag 3 at this point, because a lot of the big tech have been selling off. Tesla's been selling off for quite a while. Apple is selling off. Google is selling off. Microsoft showing weakness. Amazon is one of the few showing strengths. But then on Friday, we had a huge decline in NVIDIA, which was looked like someone was offloading on NVIDIA as it lost about, I believe it was about 100 points. And so now that is concerning, because that is the number one thing that's been holding us up. So we want to see how that plays into this week. We're going to continue to get more selling off from the Mag 7. If that's true, this thing could start getting really nasty really fast, because there isn't strength in really anything else. There's strength in the banks, but you get rid of the bank term funding program, that may flip very, very quickly. So again, the next 3 weeks, I think, are going to be very important going into the next earnings cycle. It's just normally our heavy sell-off period anyway. And that's just the normal selling off period. There doesn't need to be news, is what I'm trying to say. This is just normal part of the cycle. So we'll just be patient and let's watch over the next 2 to 3 weeks and see if we pull back heavy. Maybe it's guided by some news. Again, we're not going to price in a recession until we get that rate cut. So just keep that in mind. If it happens to happen during this downfall for the next couple of weeks, that would be fantastic. Otherwise, we wait until that does happen. But that is pretty much all I got for my notes. Again, that part of it's going to be pretty quick today, because, again, there was still not a lot going on. So we'll have to see there. But I said there's a lot of good events here that are telling us what we've been talking about this whole time, and solidifying that. But again, ultimately understand that we are still waiting for that linchpin essentially to be pulled. Now, it's something I've been watching on SPX. We've been absolutely parabolic. I've talked about this multiple times, but we've been parabolic ever since essentially the rate cut. This is the rate cut here, right on a dime. At 4,100 level, like I said, around that time period, if it broke there in last October, that we were seeing new lows. And that's when they paused rates. And this is when we started running up, which is normal part of any cycle when you're talking about these cycles. So it's been absolutely parabolic since, and made new all-time highs, which at that point, if it would have broke that, the fact that it held that, I was pretty much thought that it was going to go back to all-time highs, because it held the 4,100 and exploded out of there because of the official pause. So, but now we're in this channel. We're going to have to watch and see how this plays out. If we start selling off heavy this week, I've already talked about this. We started selling heavy on Friday. If we start getting down here roughly around that 50-59 point is going to be critical. We might get a little bounce there, but if we break that out of this channel, that could get pretty nasty here in the sell-off back down. I think if we can't hold these levels, especially this 5K mark, well, the market may not just want to put on, right, any more risk where we're currently at till it gets more information. That's something else that can happen until they get that linchpin, because people are aware that things are bad. People are not just blind to everything that's currently going on, but ultimately understand that it needs to really hold that critical level there, and then we'll see what happens. But again, watching this channel, top channel, roughly being at 5,200, essentially to that 5,052 mark is kind of what we're looking at there. And then you got another level here at the 49.32, and then another level here roughly around that 4,800. So that's what I'm watching there. And as of right now, crypto has been absolutely parabolic. We've seen a new all-time high at 71. Again, continuing to see crypto. We got the Bitcoin halving about a month away, roughly a little over a month away. And ultimately understand we haven't seen true bull market for crypto until roughly about that 6-7 months after the halving. And so the fact that we've been running up before then leads me to believe that we're going to get a heavy pullback in the next couple months, and then in that time will be an ideal time to add to your positions and then get ready for the true bull run after that. And again, crypto and the market and in general, they're going to start rocketing because eventually I believe the printer is going to start turning on because we're going to kill demand so bad at some point. But again, it's going to be very difficult, and I wouldn't be surprised if a lot of things that we discussed here will be pushed off till next year, only because rates may have to stay where they're at. The problem is if the rates stay at where they're at and inflation continues to go up, we won't see rate raises for a long or rate cuts for a long time. If we have to start increasing rates, tech is going to get destroyed because of that. And so this is two-sided. Either we need to price in a recession now, or we're going to continue to try to push this thing, and then you're going to start increasing rates because the demand just isn't coming down. And then, the stocks are going to get crushed from that and the interest rate and inflation. So again, we will have to wait and see how that plays out. But crypto definitely leading the way. It typically does around this time. So just keep that in mind. Ever since the GameStop whole fiasco that happened a couple of years ago during the pandemic stuff, March has kind of been that time period where it's been like meme coins or like crypto and like essentially meme stocks are kind of like been the big thing since around this March period, because like the rest of the market's kind of dead. It's been pretty choppy. So it funnels into there, and then you kind of get a dip, and then you get a huge rip on the towards the back half of the year, especially in crypto. I'm assuming the rest of the market will do so as well, but we have to really price in. We can continue to try to grind up, but we really need to price in a recession at some point between now and then. And then that would provide even essentially kill prices so that we can go higher and be stronger. So now Tesla is going to continue to get hit. Again, everybody sees Tesla as an EV company. I talked about the services as well. The services are doing very, very well despite what's going on with the vehicles. And again, obviously because it's EV, people are going to say, well, it's a car and they're going to do horrible, and it's a car manufacturer. Yes, that whole industry is not good in general, but understand that they've built a service-based company for energy as well. This is what I like about Tesla, is it has an ecosystem like I talk about, like Apple does, like Amazon does, right? Like if one sector of it may do bad, you have other sectors that pick up the pace, and we're seeing that with Tesla services is picking up very well. And so it may start helping Tesla during these earnings. And then once cars start selling again, it's going to be even more of a force to help them achieve some goals. So as of right now, getting rejected roughly around this 183 mark. Again, I still think the 150 mark is where we're headed. Will we sell further from there? Again, it depends on timing when we get around this level. But I wouldn't be surprised if we get down to this level maybe over the next couple of weeks before the next earnings cycle, then maybe start pushing back up to roughly around that 230 level. Could be a possibility, and kind of just play this wedge. We'll continue to watch and see if that's going to happen or not. But as of right now, I still do very like Tesla, and it's not even including the self-driving. It's not even including humanoids and AI. or robo-taxi, right? Like there is just so much going for Tesla. They're very innovative. They know how to make their products a lot cheaper. I mean, they just got so much going for them. And then you also have Elon, which I believe is one of the greatest CEOs of all time, leading the pack and understanding what could potentially happen with Tesla and where the possibilities of it going. And I do believe it will be the biggest company in the world and overtake all these other companies at some point. Nvidia is great now, but in a couple of years, when all the databases are full or all the data centers are full, right? Like there's only so many chips you can sell, right? To sustain that amount of growth they have now. They're seeing that growth now because people need the infrastructure now over the next couple of years. But that will gradually start slowing down. I think they said by 2026, they see that growth rate really trimming back. And I agree with that because at that point, then you're kind of just, you only got so much allotted supplies and resources to be able to do that. So, but we will see. So Tesla, again, looking for the 150 mark as of right now. Current ceiling roughly is at 202 mark. So we'll continue to watch that. Palantir, again, just won another big contract. So it had a big candle this week. But it starts selling off. We'll see if this thing starts pulling back. It needs to really fill this gap fill and come back down to 16. I'd like to add some more there if and when that comes down, and then see what happens there. Google, Apple have been selling off pretty heavy. I bring up this PayPal. I still really like PayPal as another position. Again, it is consolidating very nicely around this $58 mark. Again, the low being the 50. Again, if we start getting rate cuts and pricing in a recession, Tesla and PayPal have already sold off quite a bit. And so, yeah, maybe it drops back down to 50. It could go lower. It could go to 0. So, but nonetheless, I still think it's still a great with a new CEO. I think it's just a better vision right now. And I really think PayPal is going to start accelerating here towards back half of the year. And so I want to try to accumulate again as much as I can of this as well. Moving forward into the back half of the year. Then we do have BA. BA's more and more problems. I think there was a wheel that fell off this week, and then the documents for the door that blew off essentially have magically been missing. So with that being said, it's roughly holding the 197. Again, it could drop down to 178, but again, it's consolidated roughly around this 220 mark and this 198 mark for quite a while. I mean, really, you could really just play this range back and forth, day trading, or not really day trading, but you just buy the bottom, sell the top, buy the bottom, sell the top, buy the bottom, sell the top, or vice versa as well. You could do very well with BA. I hate trading BA if it's not just shares. I do very well with shares, but I don't like trading options because the options swing quite dramatically to both sides of the spectrum. Then you have JPM. JPM looks like we're topping out roughly at the 190 mark. Again, it's just been slowly grinding up. Same exact move as the market since roughly around that's been in December since October. So the market's been going up since the official pause. Again, we'll continue to watch and see how this does. I do believe this is going to come back for a heavy pullback. Got a little bit of support here, roughly around the 183. Got some major support here, roughly around the 175. A little here, the 166 mark, and then we'll continue to watch and see how that plays. But not going to make this one too long as again, this week is going to be big, major. The funding stuff will be important. The data will be important. And then we're pretty much going to go into a period where we got monetary policy the week after that, which, again, not expecting anything there. Don't be surprised if something does happen, but I'm not really expecting anything there. Kind of just waiting to roll into the next earnings cycle. Again, the headline news, watching layoffs are going to be big things. And again, always remember to be watching for that rate cut, because when that happens, that means shit is pretty much hit the fan. So with all that being said, if you made it this far, I appreciate you. Go ahead and drop a like. And until the next one, I'll see you guys later.